Raj, hi, good to have you with us. How have you been?
Hi, Ashu. Yeah, it's so nice to be with you. I've been fine with God's grace. He's taking good care of all of us and keeping all the evil spirits away. So yeah, doing fine. Thanks.
Wonderful. Raj, this is an exciting conversation, right? Given what's happening in the Indian, financial ecosystem, right, across the board, I think is absolutely phenomenal, right? I mean, who would have expected this kind of, a resurgence, right, and this kind of an adoption? It's absolutely amazing what we're seeing, right? And I think, that just puts us on a very different growth track, right, as an economy. Right. So that makes this conversation very exciting. But Raj, before we get into our discussion today, right, I'd love you to take us a quick round of introduction will be helpful. You've been there for a reasonable amount of time. A quick round of introduction would be very helpful.
Okay, so I take it it's the company introduction. So I said if it is a quick one, then here's something that's bound to raise everyone's eyebrows a little bit. Because as opposed to the very fashionable, hundreds of millions of dollars going in and going out, I started this company with 1,000 rupees.
Wow.
Exactly.
Right.
And here is the shocker that up until the May of 19, which is just about over 2 years ago,
right,
that's all the capital we ran the company on, 1,000 rupees. And yeah, And in the event, I started with one person, one employee. We are now 3,500 employees, and
wow,
we are in over 250 locations in India.
Right.
And when we got there with 1,000 rupees.
Wow.
So when they say money can't buy you love, it also certainly can't buy you success. You need something. There's an X factor which you need beyond just pure money. Okay. Right. So that's how we started. And the business that we do, really speaking, is we are on the customer side, whether it is a home loan, whether it's a loan against property, whether it is a credit card and the full range, or it's unsecured lending, like personal loans could be to a salaried individual, also to a self-employed, which means that be unsecured, slightly bigger ticket, but it's also classified as a personal loan. And so primarily these products, if you were going, if you wanted to pick anything, let's say a credit card, what suits you best in terms of your needs, your requirements, also, and they're different. There's no one size fits all in any product. It isn't you could talk to your best friend and say, hey, what's it doing for you? It isn't how good a friend that person is. It's actually if his needs and his preferences are the same as yours, he could probably tell you what he's doing, and that would be worthwhile for you. So
very interesting.
So therefore, go ahead, talk to people around you. But in the end, you have to analyze your own needs. What are my preferences? Do I travel a lot? Do I use engine oil, pumps, or do I eat out a lot? Do I use the internet a lot? Do I go online a lot? Do I do a lot of shopping? Do I go to Shoppers Stop or such other, items? Only then can you come to a decision about which credit card works best for you. And there's also the pricing. Not all credit cards are free. There's an annual fee, or there's some other catch to it that if you spend so much, we will waive off the fee, so on and so forth. So just as an example, you would need help. So if you came onto our website, you would have all the all the options, whether it was a home loan or a personal loan. You could actually compare, and if you like, which frankly most people still do, despite this, too much of it online, they want to talk and want to understand the various options, get some comfort. If you home loan, it is going to be with you for say 15, 20 years. You don't want to go into it unresearched, totally researched, as it were. So be on the side of the customer. We will help you recommend rather, out of the 100 credit cards, we'll recommend the 3 which will fit your preference set, if I can put it that way. And then leave it to you to decide, because we're not charging the customer anything, whether it is for a home loan or a personal loan or a card. We are there to give you the best possible options for you. And that also in a loaning sense, where is this facility most likely to get approved from is a big deal as well.
Absolutely.
All banks are, it's not a monolith. Each institution is trying to target, a segment which could be unique. There's a lot of overlap. So where you would fit, and what are therefore the three options that work for you is what we bring to the table.
Very interesting.
And therefore, and on the other side, it isn't that we are oblivious to the banks or the NBFCs. The banks also want the type of customer that they want. They're seeking things. They want to build a portfolio which is mandated to them, and also it has to be a high quality portfolio. It can't be going, it can't be heading south anytime soon, to put it mildly. So being mindful of what the bank's requirements are and also what the customer wants, we are slap bang in the middle of this, like you said, a very interesting journey.
Raj, I've been a banker, right? I mean, I started my career as a banker. I was with some of the MNC banks operating in India, right? So I mean, I understand where you're coming from, and I understand the sensitivity that you're talking about, right? And it's so much more important to have a sharply built layer, right? Because unless you have that, it's an extremely cumbersome process, right? And I think enablers, it's very critical to have that layer, right, of enablers who can really handhold the customer, right? Because the nature of the product is such where, and I think also the fact that there's the amount of literacy that we have around financial instruments, right? I think is so limited that I think there is this very critical need to evangelize the cause, right? Thus, it becomes important to have enablers in the process. Raj, I'm gonna, it could be a cliched question, right? But how did My Money happen, right? I mean, was this a natural interest that you had towards money, or experience something, bumped into something, and you said that this is a problem that each one has, right? And let me try and solve this, right? Before we dive into more specific questions around the construct of the organization, many people who work with you, we can start talking about all of that. How did the journey happen?
This is, I think that you're going to get used to getting shocked because I wasn't even trying to do this. I'm a chartered accountant. I was, and after that, I was with KPMG for a few years and came back. I was practicing professionally, and at that point in time, Citibank decided to roll out its retail banking proposition. There was no retail banking before that, so I think they were taking a punt. They were going with, as the economy grows, Indian consumer will behave in the same manner like anyone else, in a more developed economy. So they were going with that funda. I was going to see, curious, to see where this is going. I continued doing professional practice, and for, like they say, I was rolling with the punches because they were experimenting at their cost, and I must say, with all humility, I was learning through somebody else's experiments, which were very expensive. Only an MNC bank could have done that. And then in 1991, India, the Indian economy opened, reforms kicked in, and all this began to pick up speed. And that's, what you said. That's when I developed this great interest, and also I was looking ahead, seeing that there were going to be hundreds of millions of people wanting retail finance, as distinct from corporate finance. And as I look back upon this journey, I might add that it's not only the availability of personal finance, it's also, Ashu, the fact that thought processes have changed. Society thinks differently about borrowing.
Absolutely.
In the 80s, to get a home loan was not a particularly happy situation. People didn't even want to talk about it. People didn't want to borrow. I mean, the biggest deal was, dad was going to get a little bit of money against his provident fund, buy a plot of land, and then try to build a couple of rooms on it. Was all home loaning was about. And now it's the way people think has changed a lot, and for the better, I might add. Where they say that there is a mix. You've got some money now, but you have needs which you can borrow for and cater to, and then pay for later. There's no stigma attached to it anymore.
Interesting.
So that is the biggest change that we've seen in consumer behavior. as we go forward. And then you had giants like HDFC Bank, like ICICI, like Axis, Kotak Mahindra Bank, and the foreign banks as well, whether it was Citibank, Standard Chartered Bank, HSBC, Deutsche Bank. All of these people, get into a retail finance, and that's when the boom happened. And I studied economics honors at SRCC. So at that point in time, we were taught that there were three factors of production: land, labor, and capital. But this is a balle deal. Okay, there are three factors of production. As time has moved on, you could say 20 years ago, at the turn of the century, you could have added a fourth factor: technology. That's when the tech boom, all of that came in, and we knew that there was a fourth factor of production in addition to land, labor, capital. Now there was technology. And if I might add, there's no sort of a cutoff point for this, but I'd say about 5 years ago, a fifth factor of production was added to this, constellation, as it were: data. And now we are going forward, with these 5 factors of production, as I like to think about it. And I might add that my money mantra, seized each one of these factors, the new age factors, if you like, as time rolled on. So, in fact, I would say that some of our, the tech giants that you see, household names, I'm not going to take names, right? So, who are here already, who brought technology into the financial services, into banking, actually did a yeoman service to the industry as a whole. Because they were very smart guys, they were techies, they brought technology into the sector, and which was absorbed by the banks or the financial institutions. A similar technology was also absorbed by people like us. But you have to give them good credit, whether their companies are doing well now or not, whether they are profitable or not. I'm not going to comment on that. I can tell you myself, being a chartered accountant, I always knew this do ka sawa do. I never made a loss. Even that 1,000 rupees paid up capital, each one of those 32 years of our existence, I was never going to live with a loss, or I wasn't going to experiment to such an extent where I dig a huge hole for myself, and I'm not able to take myself out of it. I suppose you could take somebody else, not me, and that's the reason why we took on our investment when we did. People ask me this question quite frequently, Ashu. Why didn't you take on your capital earlier? Why was it only in the May of 2019 that this happened? It's again the same funda, or old-time thinking, if you like, whereby I was never going to do large-scale experimenting with somebody else's money. And then if it didn't work out, look at him and say, hey, sorry, partner, nahi hua. Give me a break. You take somebody's money. You can't say, sorry, partner. Legal thing is that you took on equity. We went bust. See you in the next life. That's not me. Okay. So I did all this. I was watching this tech revolution, if you like, if that's an overused word, take hold. I also knew that I had to get on to this fourth factor of production, if you like, soon. Otherwise, I would end up as an exhibit in the National Museum. But I also knew one thing, that whatever worked in North America or in Europe or in Southeast Asia or any of the other developed economies, per se, line for line, ditto for ditto, was not going to work in our landscape. The Indian financial services landscape is on another planet. It's neither Venus or Mars, but it ain't even Earth, or the rest of the planet is on another place, and we are on another place. You can explain that in 100 different ways. Our judicial system is like that. It takes a long time to recover money. You can go on attitudes are like that. People are not so easy.
Raj, that's a very interesting point that you highlighted. I hear you, right? And you've been there for a very, very long time. I started my career when, essentially we didn't have, we still had the process was still very, very long, right? And I understand where you're coming from, but the fact of the matter is, when you have an economy which is growing at the pace that it is, which is at the age that it is, right? The aspiration is very different, right? And it only makes sense to enable that aspiration with right kind of a credit, right? Now, I mean, I understand where you're coming from, right? Our system has been built in a certain way, right? It sort of had a certain, life cycle in terms of, from an application to loan disbursement, so on and so forth, right? But what these fintechs did was essentially created a super intelligent layer. They said that, we're going to be in it with you, when you're lending, right? So our neck is also on the line. We also lose capital, right? But we'll help you disburse faster, right? Don't you think that's a better construct for a country like economy, which is a country like India, right? An economy like India, which is wanting to go at that pace, right? And COVID has kind of brought us in a very unusual situation, and I'll talk more about that, right? But what are your thoughts about it? I mean, banking system and NBFC system, for example, took the longest time, right? I mean, a typical TAT was nothing less than 3 weeks, right? And I'm sure you've seen that entire journey. You've possibly seen a more difficult system, right? Because you've been there as an organization long enough, right? But don't you think they kind of fast track? I mean, I understand where you're coming from, right? There could be a possibility of loss, but that's where you improve the system. That's where you start optimizing the system. And India is not a market which is you can solve it with one single play, right? You'll have to bring in a lot of geographical understanding, a lot of regional understanding, right? And of course, many other software aspects, right, which become very, very important. So, what are your thoughts about that?
Yeah, well, in essence, I'm in total agreement with you. It's just the path that you take. How do you execute on that? See, the theory is all very well. We agree. You and I are on completely, identical wavelengths, so not even similar. But the execution has to take into account, the construct of our economy as a whole. It's not only about the demographics. Demographics is the demand side,
Right.
which hundreds of millions of our citizens who are maybe 600 million who are less than the age of 30 are all customers for personal finance. They all want either a personal loan or a credit card and eventually a home loan and an insurance as well.
Right.
How we deliver it to them is the execution is the key. The idea is perfect. So that's
Right.
how we execute it. That's how we are completely unique, actually, from from the rest of the pack, if you wish, because we adopted the Phygital, physical plus digital model. I was telling you that I was watching these other people come up and I was learning from them and figuring, I knew that exactly what they were doing was never going to work. And that is, as time has gone by, has shown quite a lot of them are in very good shape, so to say the least. But I also knew that technology was essential. There's no way we can get around, without adopting technology. So we started then about 5-6 years ago, started adopting technology to ourselves, and tech enabling our workforce. We also, as a matter of fact, then we got to data. We realized that we had humongous amount of data over decades, and that we needed to now standardize it and to store it and then utilize it, right? And we've used, an agency to successfully transfer our data lake onto a cloud using AWS. Additionally, we strengthened our technology infrastructure across the board, whether it was data analytics, digital marketing, etc. We were leveraging new age technologies like headless CMS for content, React.js and Node.js for user experience, microservices backend architecture, MongoDB and Oracle for database, AWS services for data engineering and Power BI, amongst others. As a matter of fact, all of this we were doing on our own money.
Right.
It's only when we figured out that this is the real path, there's no more experimenting, that's when we invited, our very nice partners for a $15 million investment into our company. And we were not thinking anymore. We were only stepping on gas. So you see, our data analytics backed business acquisition is growing at 20%. Our data lake initiative helped us overcome COVID and build robust technology infrastructure like AI, ML, and data analytics to ensure a seamless customer experience is what you referred to, right? To expand the scope of operations, we actually acquired 2 financial marketplaces, Bengaluru-based, Ascon and Hyderabad-based Shasta, and completing a third one in Western India, in Gujarat and in Maharashtra.
Interesting.
So yes, so what you're saying is absolutely right, that this is the way to go. This is the way to bring speed. More importantly, what you'd also said earlier was about financial literacy, you can use technology to take it right down to tier 3. Forget about tier 2. Tier 3 level, the cities, villages, if you like, or towns, where the need is humongous, where they need to get away from the corner store, money lender, and need to get into the organized way of borrowing and paying back money. So yes, we adopted this physical plus digital, which we call a Phygital model. And as such, the way we've come out of COVID because of this, it isn't, look, I didn't plan COVID, nor did anyone else.
Nobody did.
Nobody did. And frankly, nobody had the timing. So these are all preordained. We had made these investments, we had got these learnings, we had tech-enabled our company, we had got data lake up, and we were utilizing this, and that's when COVID happened. And surprise, surprise, the way we came back, I want to share one or two figures with you, about if you like, about the company, which is talks to really the speed with which we came back to market. That's where technology and data is to be leveraged through and through. Remember, fintech and technology mean different things to different sectors in the fintech sector. Mm-hmm. For instance, in the payments, you can use technology as much as you want. In insurance, you can use technology to the ultimate. Why? Because in none of these sectors of payments, of financial services, are you taking a credit decision. You're either enabling payments through payments, or if you've got insurance, then you're taking money from the customer and giving him a product. Mm-hmm. In lending, you're actually taking a credit decision. That in our setup in the Indian, that's where the differential lies between, say, a more developed economy and and India, where credit decisioning, again, technology plays a big part in terms of sharing documents, in terms of analyzing consumer behavior. But credit decisioning in India is very different from, say, for instance, in the United States. And that's where a little bit of a bump or a little bit of limitation comes to how technology can be adopted in our context, as in the lending context, if you like, as compared to how it could be done, for instance, in the payments context or in the life insurance context, in India. So, it is this here. So you have to dig deep to come to this sort of conclusion. Otherwise, it looks the same on top. Yeah.
I think I have a bunch of questions on the technology front, right? But I'm going to, before I talk to you more about that, right? I'd love you to take me through the consumer journey, right? So how is MyMoneyMantra uniquely, what's the construct, right? What's the consumer journey like, right? I mean, you spoke of the Phygital model, right? Tell me a little more about it, right? In the sense that how does the engagement happen? So you acquire a customer digitally, right? And then you have last mile agents, or you have literally set up offices where a person can walk in and and then there is this guidance that happens, right? Tell me, take me through the process a little to help me understand this better.
See, Ashu, it's a mix. There's no one process that works at all. But essentially, it is along the lines that you just described. But I'll I'll elaborate on that a little bit to say that we engage with the customer the way the customer wants to be engaged with. He may not want to engage digitally with us, or he may want to engage digitally with us, or he may be somewhere in the middle. Right. So we are there not to tell somebody what's good for him. They're not prescriptive. We'd rather ask Ashu, how he wants to engage with us, or how, if you come onto a website, then we'll engage with you the way that you wish to be engaged with. Or if we've got the customer through cold calling or on the telecalling, then we engage with them like that. So there is no that this is how it happens in my mind. I love to go into stuff like this. Technology does have a certain rigidity about it because it's logical. It has science behind it. So there is certain rigidity. How you apply it is all about fluidity. Right. You have to, there's a certain fluidity about intuition. What's going to work? How is this customer going to get serviced? So you have to be a full service organization whereby you say, you have all of the stuff that, you were talking about in terms of we have offices, and all over the country. People can actually walk in there, or they can be asked, they can call and say, send somebody to my home or to my office. So all of that happens, and the digital process also happens. So it depends on what the customer wants. And remember, the person who has the last call is the guy who's making the dispersal. The guy who's making the home loan decides how much technology is good for me. Namely, it's the bank who decides I'm going to take technology all the way, half the way, or not at all. Mostly, as we talk, they're somewhere in the middle. They're not taking it all the way. I mean, can you imagine, trying to find the title documents of a property in old Delhi,
right,
and trying to figure that out? Technology. Give me a break, guys. Or if you go to some of the older cities, Varanasi, who inherited the property, and how is he going to take a loan against it, and so on? Or which property is he buying? What do the municipal records say? I don't think.
But Raj, that's a problem that even major financial institutions go through, right? I mean, even banks struggle with that. I mean, there have been many cases that we've seen.
Actually, that's exactly what I said. It's like that guy who makes the dispersal has the last call, how much technology he is using. So yeah, so there, I won't say struggling with it.
But don't you think that's an aberration? Don't you think that's an aberration? Because that's a small part of your portfolio. I mean, that's not where your larger part of your business is coming from, right? So I mean, I understand where you're coming from.
Sorry, okay.
I'm saying, for example, Chandni Chowk example that you gave, right, or a Varanasi example that you gave, right? These are smaller, areas, right? But you can't paint the entire say sector with one brush, saying that this is a problem which is there across, right? I think many of that is kind of now getting solved, right? I mean, because they're getting digitalized, there's so much more which is happening in that front, right? Which essentially makes it very transparent and visible, right? I mean, I understand where you're coming from, and your concern is absolutely right. But there is a lot of development which is happening, right? A lot of new purchase which is happening is not happening necessarily in older areas, right? It's happening in the new upcoming areas across cities, right? Across a tier 2 and a tier 3, right? Where there are little problems that you mentioned.
Well, first, Ashu, slight difference of opinion with you, because sure. They're not slight problems; they are big problems. Mm-hmm. Okay. But I must say that yes, a fair amount of the purchasing for property, for instance, like since we are talking about that, happens. Is new age construction. Could be in Gurgaon, right. It could be in it could be in outskirts of it. Could be in Whitefield in Bangalore, right. Or in Goregaon in Mumbai, and so on. So a fair amount is that, whereby the title documents and so on are straight through and are straightforward. But remember that that's, Bharat is somewhere else. Even for that matter, in these, if you take, let's say, Central Delhi property in Connaught Place, there's a flat buyer agreement. It's not even gotten released also. It's new age. Or for that matter, maybe it's a power of attorney transaction. It's a, so even in the newer construction, if you will, there are complications, and there's no standardized way ahead that here's one property and then this is how it's going to get bought and sold. Some of that is happening, I agree. But I think that's the little side. The rest of it, a vast majority of our, property transactions, for instance, do have some small complication. But that I must add, clarify that there is still so much of mortgage lending that can be digitized, and which, frankly, COVID has given that an impetus, where technology has been used to digitize even the mortgage lending. The point I was making is that we haven't gotten to a straight through digital process in mortgages, and I don't think, whereas you're right, records are getting digitized and so on, we are still some distance away from that, is my guess. I mean, and I've been doing this for 32 years with them.
Interesting. And I'm not going to challenge that. Right? I mean, that's not the intention. Raj, one thing that I want to talk to you, right? I mean, today what you see is that every lending company is essentially chasing the customer, right? Because of course, there is a limited pool which qualifies, right? Everybody has to there's a pressure to maintain books, right? While they have to do that. Everybody out there, right? A distributor platform and a middle layer, which is that of fintech companies, are essentially also chasing the same customer, right? Now, what happens in an environment like this, it's something that you highlighted, right, is, you are essentially using tech for better understanding of the customer, right? Now, and that's only limited to your own setup, right? So essentially you're operating in a silo. when you're talking about fintech companies, they are using possibly similar information, maybe a little more, doing a certain bit of credit understanding, right? And then taking a half-cooked pie to the institutions, the partner institutions. That could be an NBFC, that could be a bank, right? And essentially, working to build a funds fastest transaction, right? So deployment of funds happens fast. Now, in an environment like that, what happens to the cost of acquisition, right? I mean, given that you are playing a very different kind of a game, your business model is very different, right? How difficult has it gotten with so much money of sort of flowing in, right? On the cost of acquisition of a customer, because same customer is being chased by a fintech company, a distribution platform. What happens in an environment like that?
Well, I don't know whether your customer is being chased because fintech companies have a different rate of interest they offer. For instance, the personal loan, which is probably closer to 14-15%. Early
Right.
salary loans, which are also personal loans, probably hit somebody at 24% per annum rate. Whereas a personal loan from HDFC Bank could be close to 7 to 8% maximum. So it's a question of, there are horses for courses. There's no one customer. There are different types of customers, and they are in different, parts, different geographies, and they are in different demographies, different age brackets, different income, and different risk appetite. Therefore, and pricing of risk is like that. So, chasing of customers, I'm sure everyone is looking to build their portfolio, and they all want to do it sensibly, so that they don't have to write off losses later.
Sure.
But I don't think that this again, sorry partner, but this chasing the customer is not a phrase that personally I would use, because there are customers, and then there are bankers or there are NBFCs, and there are different ways of fulfilling them, and there are different pricing for them. So it's a big market. It's literally hundreds of millions, and there's no one person who can say that he has even 1% of the market. Forget about 5-10%. This market is very. I mean, each one has got some niche they're trying to to work in that. So are we.
Right.
So I think as things stand, technology is playing a central role in all of this. The fintech companies are doing a good job. So are the banks. Slightly because of COVID, there is obviously some question mark about future income streams of various people. Subject to that, I think everyone is going quite nicely, if I might add. So I don't know if I really answered your question, but that's what I think.
Interesting. No, I think there are no right or wrong answers. I think it's just a point of view, right? I think that's how I see it. Raj, COVID has brought in a very different kind of a risk, right? At a consumer level. I think two ways, right? Of course, there is a health side issues. There are a lot of health side issues that people have now become sensitive to or have contracted in the process. Second is on the preference side, right, which is essentially the consumption side, which is I think more extremely interrelated with the lending ecosystem, right? That said, the preferences are going to change very, very fast, right? And that essentially will possibly result into a higher requirement for credit, right? And newer age credit instruments, right? But what it will also possibly do is we are moving into a gig economy play, right? Where there are going to be lesser of long-term contracts. People are essentially going to be working on certain assignments are going to be paid, right? And there's a huge new construct which is coming together that's not necessarily clear in the trend form right now. It's difficult to sort of make a comment, right? But how do you see the situation, right? I mean, I'm sure as a business owner, somebody who's extremely relevant player in the entire ecosystem, right? In the entire financial services ecosystem, right? How do you visualize the situation, right? What are some of the key takeaways you think are going to be extremely important in the next 2, 3, 4 years that in this particular sector, in the larger economy, right? What are your thoughts about that?
Do you mean how will the credit landscape move over the next 3-4 years? Is that the question?
How would credit landscape align itself to the preferences, the very quick, fast changing preferences that we're going to see, right? And not necessarily a fixed income base, which we're going to see increasing, right? It's going to be a more gig-like base, right? Where people are going to be more contractual, they're going to be working, we're going to be seeing a lot of freelancing happen, right? I mean, that's the whole, essentially, that's the construct which we see come through, right, in the next few years. What are your thoughts about it?
Yes, that is indeed, you're absolutely right, Ashu, that is a construct that we're looking at. How will this get married to the landscape? As far as the credit landscape is concerned, is actually the jury's out on that one, because it will, each one will, again, we're back to that, the title papers of the property. Each individual and each assignment, who's doing which sort of work and for whom, who's the paymaster, what is the regularity thereof. Only then, if there is a way to establish, the credit worthiness of that income stream, looking into the future, which is uncertain by nature, obviously, there will be a different pricing. I do feel that there will be, and like you correctly pointed out, that there will be some NBFCs who should probably go into this situation. But some of the standardized banks, I don't see them taking risks and making high-priced loans into a sector which is not fully structured.
Right.
But I do see, for instance, that some of the new age players can come up with a way to address this demand, because the demand is there. It is a supply side constraint. Who is going to disburse the loan? I'm sure that some of our very smart people in our NBFCs and our new age NBFCs will certainly come up with a way of assessing this and probably pricing it and then building a portfolio or building a book around it. I don't think this is going to happen swiftly. The pace will be slow because people want to experiment on this platform. They will take it forward, but they'll wait to see how this turns around, because nobody can take a big, blind child, it's not Diwali yet.
Right. Interesting. Raj, what are your thoughts about the risk modeling, right? I mean, you highlighted about it in certain form and way, right? But do you think the fintech players are far better prepared, right? Because of, the technology thought process, technology integration, and not just, for example, say certain very visible factors that I think each financial institution, banks or NBFCs use to underwrite and understand a customer. Fintechs use a lot of softer aspects as well, right? For example, preferences, consumption orders, interaction with a lot of other apps in the ecosystem. They'll be using a lot of other data points, right, to do a credit assessment of an individual, right? Do you think the newer age risk models are going to essentially be run by these institutions, and eventually banks and other NBFCs will also have to hop on this layer of fintech startups to eventually deploy their capital as well, because their understanding of risk is already very different? What are your thoughts about that?
Yeah. Now, like I thought, part of the answer is, in what I said earlier, which is that, yes, this will happen. It will happen at a micro scale. Eventually, if there is any success, then some of the bigger players or the banks, will again take on to it again cautiously. I don't think that, there will be a flood of this type of activity, anytime soon. So, but yes, it will happen slowly. And as we go along, as this becomes the norm, as it were, then the other banks will also, the bigger banks and the more traditional banks will also come into play. And maybe then the pricing will come down, because the kind of product, Ashu, that you're describing, I think if it was unsecured, it would probably go at 25-30% per annum rate of interest. What kind of market there would be, and what kind of customer would it be who's willing to pay that kind of rate of interest when there is 7% rate available, but he's not getting access to it, but he's still a customer. He has the need for it. Nobody is able to give it to him, so he's willing to pay 25-30% rate of interest. That's going to be a big ask, but therein lies it. It is cutting edge stuff. It will get there and it will move. Will it move swiftly? I don't think it's going to move swiftly.
I think this is the point, Raj. You want to, I think no amount of discussion will, I think, ever suffice. And I think this is a very, very important point, right, in the entire scheme of things. Raj, I'm going to move to my next question, right? And when I look at MyMoneyMantra, the entire construct, right, you essentially spread across two things, right? One is essentially loans, right, and across various kind of loans, right, short-term and long-term loans. And I think another thing that I see is insurance, right. But what I don't see is for example, investment products, right. Less of mutual funds, less of PMSs, right. And typically the environment that you operate in, right, which is a Phygital sort of model, right. I mean, I see you as a supermarket, right, for financial needs of
Exactly.
any individual,
Exactly.
right?
Exactly. Thank you.
Uh,
That's the word I was looking for. Thank you. So yeah,
why have you
financial services supermarket.
why don't I see investment products on your as part of your product portfolio?
Well, you've got to be clairvoyant because that's exactly what I was thinking and what we are actually on our way to implement. It's only that the market in our core competencies lie in the products that we are in. We are hoping we'll get to from 1.5% of the market. We are hoping to get to 2.5% of the market. And that will be a big win. It will be a really big win for us the minute we can be 2.5% of the market. In the product suite wherein we have core competencies. So that's why mutual funds and investment products got pushed a little bit to the back burner because those competencies are different. One, and two, the runway ahead of us, in our own businesses is so huge that we said we will experiment, we will get there. And as we talk, that's exactly where we are. We will get there, but it's going to be a while. Yeah.
Very interesting. Raj, we're towards the end of the conversation, right? But I think I can't let you go without talking about Bharat, right? I mean, that's the new narrative, right? Which I think everybody's going to talk about, everybody's raving about, right? And there's a huge possibility that Bharat brings, right? What especially happened in a COVID-like environment is that the arbitrage between a developed city or an urban market and a tier 2 market is kind of reduced because everybody essentially was limited just in the four walls of their household, right? And was essentially consuming from the same source, right? So that arbitrage is kind of reduced, right? What is your thought process around Bharat, right? I mean, we believe that I think the aspiration is kind of peaking. It's going to behave very similar to that of any metro market, right? So we're going to see very similar trends, right, in terms of the consumption possibilities, right? What are your thoughts about it, right? I mean, do you believe we're going to see a similar offtake of credit products and investment products in Bharat-like market as well, which is say tier 2 and downwards, which was not necessarily a very active participant in this entire scheme of things, right? Which was still very coy when it came to we discussed right at the outset of our conversation, right at the beginning of our conversation, right, that they've been shy of consuming credit products, right, for a variety of reasons. Do you think that is about to change?
It has already changed. Mm-hmm. It's not about it's changing. It's like the change is clear and present, as it were, and it's moving at a fast pace. I see this trend only gathering speed. But then that's only one half of the equation, Ashu. That's the demand side. Remember that, when you get married, both, Mia, Bivi have to be Razi, So if you want one person saying yes, the other person has to say, so the other side is supply side. How will all demand get catered to? Because whenever you have dispersal, you have to have collection capability.
Right.
So there is that slight question mark in it as to will the demand be there? Will there be? Yes, of course there will be. Is it there? It's there now. Will it continue to grow? Yes, it will continue to grow really fast. The slight item that we all might want to think about is how will all this get catered to? And in that, I might add, technology is playing a big part of it. In fact, even digital, we ourselves use our data lake to. Because our data is spread all over the countryside. So even if it's a relatively smaller town like Asansol or Bulandshahr, or Amravati, we will have data on it and we will be able to connect with the customer and be able to tap into, Ashu, this demand that you're talking about.
Right.
There. So he may not have enough knowledge. He may not be able to reach out and there may not be too many suppliers there, but we can reach him. We can reach that demand and we can service it. So it's all good news for us as a company, but your question was more, general and for the sector. Yeah, sectoral, the demand push will be secular. It will be unrelenting. Supply side will need some work because, like I said, there are various issues on having disbursed a loan and then thereafter having to collect on that loan, maybe for 10 years. That has a different outset altogether.
Very interesting. Raj, my last question, right? What are the next ways like, right? I mean, I see you very uniquely positioned, right? While of course, there's a huge conversation that is happening around, the entire digital, consumption of, I think, everything financial product, right? But India is still a market which is low on confidence when it comes to adoption of many, many things, right? Touch and feel is very, very important, right? And
Yes,
here
it is.
you are, which is very, extremely opposite to what I think the larger conversational narrative is, where you still have a very large feet on street model, right? You have that digital model, right? And you build this digital capability, which is now weaved into that physical model, right? So one is that, do you think that's going to be a huge differentiator, which a lot of the newer age fintechs will also require as they go along, right? In a post-COVID environment, this is going to be very important. And what's going to be the next 2-3 years like, right? For My Money Mantra, what are the newer things that we're going to do? What are the numbers that we'll see you achieve? Tell me a little bit more about that.
Well, in a general sense, Ashu, that is exactly the differentiator, and you were right to pick the word unique, because we are in a unique spot. Because it was, for some of our other friends, it's, I won't say easy, nothing in life is easy, but if you've got somebody else's money, you can build the technology. But not the technology is not an end
Right.
in itself. Hey, your technology is a means to an end. It's a service item that helps you raise revenue, helps you find customers, help you, do all of that. Now that for a while you can get away by saying that I'm building scale, I'm building scale. Wait, 10 years later, you're still building scale, making losses. What kind of company are you there? So anyway, but that is somebody else's life. You asked me about my life. Yes, it is unique in that sense that we approached technology through the other side. Other people are trying to add some sort of physicality to their technology. And let me tell you, that's the tough part, because there's people. The technology that you have between your ears is the toughest technology to control. Controlling people, getting them to perform. I can write 10 volumes on it, But it's much, much more difficult than, for instance, putting a technology together. So we have actually gone the other way around. Other people are trying to put some physicality to their technology. We have, over the past 5 years, tech-enabled our organization, and therefore it's unique. Now, if I look at, if you ask for numbers, I'll tell you a number, but if you permit me, Ashu, there's one basic point that I want to say.
Right.
It will be around the number, but it will be the speed of the fight back. You see, we had 2 lockdowns, Ashu, and this I'm telling you this from, it's not a big deal conversation or something. It's only about My Money Mantra, what happened. And like I said, it was preordained. Our data lake, etc., came online and all of that. He determined that that's the way it was going to happen. It wasn't me.
Right.
So here's the deal. In March of 2020 is when the first lockdown happened, right?
Right.
So in April and May of 2020, our revenues were down to almost nil. Okay, almost. We do some stuff, but it was almost nil because the lie was out. People would say, I'm straight through digital. The bank is not disbursing digitally. How can you say I'm in the middle somewhere? Or, ऐसे थोड़ा होता है. So, but here's the deal. In June, it opened in July. And guess what? Within 3 months, we had got back to our highest monthly high. And another guess what? In the March of 21, we were twice our monthly run rate, live rate, twice, not once. If the month of March, if I put a credit line amount to the cards, we would have done 16,000 crores in 1 month, in March.
Right.
This is only half the story. Please bear with me.
Sure. Please.
Again in April, there was a lockdown. Again in May, there was another lockdown, right? And in July, which finished as in 17 days ago, was the first complete month after the lockdown. And guess what? In the month of July, we did 18,000 crores. And this is again down from almost zero. This is the speed with which you can fight back on the base of technology, on the base of data, and pray hard that this happens to you in the right way, because technology on its own was never going to do anything. You need a delivery. I mean, Ganga ka rasta to koi bhi dikha dega na, shnan karana padta, you know? So,
Right.
all right. So this is the figure I'm giving you, that our monthly run rate, in March was twice that it had ever reached, and this was coming out of the first lockdown. Come the second lockdown, in July, we are back to that in the space of a few days. Can you believe that? Even I can't believe it, so I don't know if you're going to believe it. But this is the number that we have.
That's incredible. Raj, what are the next 2 years going to be like? This is the second part of my question, right? What are the next 2 years like, right? What are you chasing, right? I mean, I love the enthusiasm that you're approaching this entire, space with, right? I think you've given me an insight in terms of what's next, right? So investment is something that you're already working on, right? What are the next 2 years like, right? What are the personal targets that you've set for yourself?
Well, next 2 years is going to be where we are today. We're going to be double of that.
Right.
We are making money today. Like I said, I'm not into this thing about, we can grow. The two are not mutually exclusive. Who says that, I can get scale, but I have to make a loss? Hey, yaar, get a life. You can get scale. I've got scale.
Right.
But I'm making money. Where does it say? Which textbook, which Encyclopedia Britannica says that you get scale and you have to make a loss? You make a loss if you like, man, especially with somebody else's money. But, here we do have somebody else's money, but Ashu, we have scaled so fast out of the 2 lockdowns that we had. How fast we scaled back? You're saying next 2 years what's going to happen? We'll be double of what we are today. And like today, we will still be making profits. Just the fact that you doubled up doesn't mean you have to make a loss. Correct? Kaun si kitab mein likha hai?
Raj, it was a pleasure to have you with us. How I wish I can have a similar amount of enthusiasm, right? But it was an absolutely fantastic conversation. I completely understand where you're coming from, right? And I think we're still a market which is, we're still building our pieces, right? I think it's a market. It's extremely complex, right? So I think, and there's space for, like you said, everybody, right? And I think it's going to take a lot more effort to go out and get a large pie of this market, right? But Raj, honestly, it was absolutely phenomenal to have you with us. I thoroughly enjoyed this conversation. Thank you so much for taking the time out. Look forward to having you with us very soon.
Thank you, Ashu. Me looking forward to. Maybe I'll share, be able to share some nice stories, and not stories, but actual stories.
I'd love to.
And it'll be such a pleasure to speak with you again, Ashu. And thanks very much. It was absolute delight to be with you.